Well, for more on all of this, we're joined now by Ashraf Laidi. He's Chief Executive Officer of Intermarket Strategy, and he joins us from London. Ashraf, great to see you. Thank you very much, as always, for making time for us. I know you've been thinking recently about the two great forces that are weighing in on the U.S. economy. One, as always, is the Fed and where it goes on rates. The other is Donald Trump and his plans for fiscal stimulus. The Fed has not said a lot about what it thinks of Donald Trump's fiscal strategy. How important is it, do you think, for markets to gain a sense of what the Fed thinks about Donald Trump and his plans?
Yes, hi Paul. Well, the Fed is known for getting its forecasts wrong and for consistently revising its GDP growth downward for the last 5-6 years. Not being able to make a forecast on the economy on the fiscal front is not exactly what the Fed needs, because not only they're unclear about it, but they don't want to talk ahead of to jump the gun, just, to be accused of of taking a political stance. And that was seen, the sign of any fiscal words was largely absent in yesterday's minutes. So this means that Donald Trump, next Tuesday, when he will speak to the Congress, he will have to be very clear and to clarify or give the nuts and bolts, or maybe not the nuts and bolts, but the overall view of this tax plan, which, when all said and done, whether it's going to deliver, whether it's going to be worth 500 or 600 or 700 billion dollars, it might not actually kick in until well into the quarter. So the Federal Reserve right now, and actually there is a debate inside the Fed. You can see, regarding the minutes, yes, inflation is up, but some of the participants are actually worried about the downside forces to inflation. So when you take that and you take the uncertainty of the fiscal affront, we definitely need to hear from the Trump team in the next few weeks. Maybe next Tuesday will be the opening salvo.
Ashraf, when you think about some of the comments that you just made and the fact that if you look at the futures market right now, they're only pricing in, I believe it's less than 2 hikes this year. You made some comments about the Fed sort of historically having to dial back those expectations, hiking less aggressively than they think at the start of every year. Where do you shake out right now in terms of your expectation for Fed hikes, and when do you think we see the first one in 2017?
Yes, Michael, I think we are going to be redux 2016 to 2015, 2016, and I think we may see one rate hike. Not sure it's going to be in December, but probably it's going to be around the summer, maybe just before the summer. I think we might see one rate hike in June. I think that some people say that once you get the stimulus from the fiscal front, in the second half of the year, that will open the door, and higher inflation, that will open the door towards another rate hike. Maybe I will be wrong, and maybe we will have two more rate hikes. But we will have to see what happens. There's also something called the fiscal deficit, the budget deficit, which is something used to haunt the U.S. dollar, in 2005 and 6 and 7. And I think it's going to continue to haunt it back.
Ashraf, so along those lines of your thought process, which you just laid out, doesn't the Fed really risk an incredible amount that they might be losing credibility with the market, even more so than some people talk about right now? That if we go through 2017 and there's only one Fed hike, and maybe it takes to the summer or the spring, yet you look at the inflation data, it's pretty strong right now. The jobs reports are all strong. Couldn't we be talking about a crisis of confidence in the Fed if we get to the end of 17 and we've only seen one, if any, Fed hikes?
Yes, we may. And if you ask them, they said, well, we have a good excuse. Look, CPI is up, but they say wage growth is not really up. And listen, guys, the highest producing jobs, the highest contributors to this rising NFP have been in the hospitality industries and have been in the retail industries. These two industries are known with not so high pay. And so we know this, and Yellen knows this, and in her metrics of jobs, this is an important metric. So a lot of people in the street, out in the street, in Wall Street, in Broad Street, will they say, look, there's high inflation. Everybody is talking about the real yields, 10-year yield minus rising CPI is giving you 0.75. It's almost going to be minus. But Yellen is going to say, yes, that's fine, but it's the wage growth that really matters, and I want that wage growth. And mainly, and the structural makeup of the economy may not allow for this rise in wages, and this crisis of confidence will still be a play for the Fed, Michael. However, I think this time there will be less attention on them, and there will be more attention on the fiscal front. And if there is any failure with the economy, probably or any recession or a pullback, this time it will be attributed to Trump and not to the Fed.
Ashraf Laidi, thank you very much. As always, he's Chief Executive Officer of Intermarket Strategy and joined us from London.